sentiment damage there. But Shriram Properties is in focus. The stock has surged nearly 77% in the last 1 year. The company has seen a remarkable drop in inventory levels. To discuss demand, we are joined by M Murali, the Chairman and Managing Director of Shriram Properties. Mr. Murali, thanks for joining in. This is a boom period for real estate companies, for the stocks as well. Tell us a little bit about your own business. How has Q3 been so far? What are the kind of numbers that you are clocking in? And what do you hope to do by the end of the year?
Overall demand has been really good and things have been progressing very well. If you look at our H1 performance compared to last year H1, we
Okay, looks like there is some technical issue that we are seeing with the audio right now, but the stock today is up around 1.2%. In fact, it's not only Shriram Properties, but across the realty space, we are seeing a big surge come by. But Mr. Murali, please continue.
So, response is very, very good, and the entire year business is very good for us. And not only that, I am very bullish for the next 5 years. It's going to be, real estate is going to be the economy is my view. So, given the current demand and government's positive action towards real estate development.
Okay. Mr. Murali, can you give us a sense of, was Q3 better than Q2 for you? Is this something that you're seeing in Q4 as well? Or was there an impact of floods that we saw in Tamil Nadu in the quarter gone by?
Yeah, H1 compared to H1, historically H2 is always better for all the real estate developers. The same momentum is continuing for us too. So H2 will be much, much stronger compared to
Okay. I think there's some issue with the audio. We're having some issue with the audio, sir. So we'll just come back to you in a bit. We'll try and sort of fix that. But for now, just wanted to point out that a lot of stocks are hitting fresh 52-week highs. So don't take your sight off the screen at the moment. Managing Director of Shriram Properties. Mr. Murali, let's hope the connection doesn't drop this time. We were speaking about demand in Q3. Also wanted to understand the pricing trends. Have you been able to take more price hikes? And do you think further price hikes could dent demand going forward?
Yes, I expect the further price increase is inevitable based on the demand. All this is happening because of serious demand, and also there is an increase in cost of construction. So there is an input cost increase, and also overall the environment, there is a push towards the cost increase. So hence price increase is inevitable. And last year we have seen, last 9 months time, we have seen good price increase on products, and I expect that to continue. May not be in the same proportion, but definitely a good price increase is inevitable.
Okay. Can you tell us what are the, what is the pipeline looking like for you, say, over the next 1 to 2 years? You said demand is very good currently, but what could FY24 and FY25 look like for you?
We look at growing at least 25% CAGR for the next 2 years' time. There is a clear visibility of our lineup of projects today in the markets where we operate already. Hence, there is a clear visibility of growth of minimum of 25% CAGR.
25% CAGR is what you're expecting over the next 2 years. We recently had the Tamil Nadu Investment Summit. A lot of these real estate companies are talking about big MOUs. Brigade Enterprises, for once, has spoken about around 3,400 crore rupees being invested in that state itself. Are you seeing more supply coming in more than demand? Because that's what's happening with some of the markets, be it Mumbai, be it NCR. Do you think that could become a problem in the near term?
I don't see that as a problem because there is a restricted supply which is coming through. See, particularly post-RERA and GST and demonetization changed the entire landscape, industry landscape. The consolidation story is working very, very different today, and there are only select players in every market. Large 10 to 15 real estate developers in the country, in every city today, contributes close to about 70 to 80% of the market today. Hence, there is a limited supply or restricted supply, and large developers like us, we don't compete against our own projects with us. Hence, there is a good supply which is coming up, but demand is much, much larger. And this Global Investors Summit, which has taken place in both in West Bengal and Tamil Nadu recently and other states today, all that which is helping the country to grow in a positive way, that creates new demand and also better perception. So all that will only lead to better demand is my view. And the supply, the additional supply, if it is coming through, it is only good for meeting the demand because the demand supply gap is growing bigger and bigger and bigger.
What about your debt? What is the debt on the books currently, and any plans to bring down debt in this next 1 year?
It's a constant endeavor for us to keep reducing on both, cost of construction to keep it on checklist and rate of interest on checklist, and also keep reducing the, overall debt. This is a constant endeavor. We have been making continuous progress on quarter. We'll continue to make progress on this also this year also.
So 432 crore rupees as on first half. By the end of this calendar year, what will your debt look like?
I don't have the number now, but it's on continuous reduction now.
Okay. And are you on track to even, complete your second half guidance? I mean, you spoke about how we grow, the compounded growth over the next 2 years is what you gave us. But it just in the second half of the year, are you on track to reach that 3,000 unit handover?
Yeah, we are absolutely on track. We are absolutely on track on delivering whatever the guidance we give.
Okay, all right. Mr. Murali, thank you so much for joining us today and telling us what the outlook for the company is looking like. So a lot of demand tailwinds that we are seeing in the real estate space, and that index is also one of the top gainers in trade today. We'll do one thing, we'll move on and talk